I'm Daniel Steeves. Today in the Beyond Solutions Boardroom, we're meeting with Eddie George, founder and CEO of New Finance and a bastion of the London tech finance scene. We're in the Beyond Solutions Boardroom today with Eddie George, founder of New Finance here in London and an integral part of the tech scene, to talk a little bit about FinTech and about the startup scene in London and the UK in general. Eddie, could you maybe start off with a little bit of your background?
Well, my background is, I originally got a computer science degree at Imperial about 27 years ago, and worked in the whole corporate banking thing in FinTech for maybe 20, 25 years. And then dropped out of that scene effectively into the newer FinTech scene because I knew that scene was getting fairly boring. I was kind of bored of the corporate thing, and I wanted to do something more creative. So I dropped out of this scene, got involved in consultancy and startups and a whole kind of thing, and then also started New Finance, which is a sort of professional community for FinTech entrepreneurs. And I started that sort of a year and a half ago, and thinking half a dozen people or a dozen people might come down the pub with me once a month. And it turned into a really large group. So now there's sort of almost 1,200 people involved. It's got a life of its own, and we're running events and launching a publication, so on and so forth. So my background is really the conventional FinTech world, and then having moved from the old finance world into the new finance world, which is a much more exciting sort of place to be.
I want to stick on the community aspect first before we get back a little bit to the FinTech, because I've have some involvement in the East End of London as well.
Right.
When you talk about networking groups and community groups, where are you different? Where is the value being added from a lot of the traditional things that we see? What's the real attractor for your side?
I think the reason we've been successful is because we run it as a very professional group, so we're much more focused on adding value. So my mantra is always, how does this add value? So for example, we publish research. We have very, very themed seminars. We produce videos, we produce guides and so on and so forth. So we're not just a sort of social group which brings together people who generally are kind of interested in FinTech. So we have a very structured format to our events. It's designed specific to add value, and that's made them very popular.
What's the audience makeup? Is it mostly the startup space? I understand you probably have a slightly more mature audience because of the nature of that part of the sector, but do you get a lot of accomplished and existing businesses coming in looking to
we
network?
do. It's something like 25% entrepreneurs and about 75% in total. It's either entrepreneurs, so 75% would be 25% entrepreneurs, 25% finance professionals who are probably thinking of doing something, about 25% investors, and then 25% might be government, academia, students, and so on and so forth. So we get a core of people who are on the pitch, who are doing things, a bunch of people who want to invest in those companies, and a lot of finance professionals who I assume are thinking of doing something and are interested in the whole FinTech scene and maybe looking for opportunities. So it's a very core sort of professional group. Speakers often say how intelligent the group is and how professional they are. So yeah, very relatively mature group.
Sounds like a pretty eclectic mix. I think one of the things that pops out of that to me is the fact that you've got not only the experienced professionals that are taking a look at moving into this world or looking for things to invest in, but isn't this typically a risk-averse crowd that you have? I mean,
Yes.
it's funny to say that about financial people when from the outside we think of them as gambling and winning and making big amounts of money or not, but they are very risk averse. So how does this exactly manifest itself in their personalities?
I think that I've worked in the corporate finance world. It is definitely a very conservative scene, and that definitely carries over into the personalities of the people in the group without a doubt. And they're just learning to kind of loosen up as they move into the entrepreneurship thing. But there is definitely that thing going on, and one of the reasons you see it is a lot of the entrepreneurs just don't talk to anyone. They have this kind of not tell anyone what they're doing kind of mentality, hiding information and so on. And you see that carried over from the corporate world, where actually it would be more efficient if they really collaborated more, for example.
we can understand that for one hand, because you're afraid that your idea will be taken by somebody else and they'll run with it. So that concern, you need to balance that with the risk of not getting it out there and not getting any ideas and feedback. But this conservative nature that we're talking about of these finance sector people, since a lot of them are the investors in the tech sector, as we were talking off camera before this, it seems pretty clear that that conservatism also hurts the investment scene here in town.
Yeah, I think it probably does a little bit, but I think it might just grow up. I think it's, you can't have worked in, if you, a typical entrepreneur in the group is somebody with, say, maybe 10 years domain expertise or 15 years. They tend not to be, a couple of 22-year-olds in a dorm room. It's very difficult to disrupt finance if you don't really know anything about how the old world works. So there might be the odd outlier who, a couple of guys will do something completely radical, but it'll be quite rare. Normally, typically, they've been in banking, they've seen how it works, they understand how it works, and they think they can do it better. They've talked to their boss, they realize they can't innovate in the bank or in the financial institution, so they come out, they grab some money, and they do it themselves. And that's how it works. So does it hurt the investment? Yeah, I think it probably does a bit, but you can't expect people who've worked in a particular job, a particular culture for so long not to have those features.
Very interesting point, though, about you need to know what's inside the box before you can start to think about what is outside the box. I've been involved in businesses before where they think they're being innovative, but if you actually take a look, you realize that innovation, if it's been done before, then it doesn't really fit the definition of the word.
The innovation at the moment, a lot of the innovation at the moment, and I said this at the last seminar, is what I call a horseless carriage. What I mean by that is it still looks an awful lot like the old world, but what they've done is they brought it out, and without legacy and baggage, they can do something cheaper. So that it's really a cost leadership thing. It's not that different. It's not the Ferrari. It's not completely different from a steam engine. We're still at that stage where people are just saying, well, my innovation actually is to do the same thing, but just much cheaper and to deliver it through the web or mobile. So that's not really very innovative yet. It's when you get really disruptive, where people are doing things that create new markets using technologies that are not recognizable from the old world, that's when it'll get really interesting. And I'm not sure we're that far up the curve yet, but there are a few little things that are doing that at the moment.
I suspect one of the reasons we're not far enough along that curve right now is because the realities of what's happened in the economy in the last 5 or 10 years. And that's not in terms of the economy going down. I'm talking about the causes of the economy going down, which means the financial sector is doing a great deal of bookkeeping and backtracking and fixing up the things that they hadn't done right, or the things that were potentially issues of causing the collapses. Do you feel that that's something that's been getting in the way?
I think there are two drivers. There are two sides to this. Yes, of course, if the economy is down, it's difficult to get investment. People are more conservative. But on the other hand, if you didn't have this crash, you wouldn't have government scrambling around trying to improve competition. If everything was fine, it actually might be more difficult to innovate. If there was, it could be more difficult, because what you've got now is you've got consumers who are very fed up with the old finance world and are keen to try new things. You've got the government who are very keen now to change policy, and they've recently announced some changes to make getting bank licenses easier, so on and so forth. So they're lowering the bar on that. So maybe it takes a crash, maybe it takes, getting close to the precipice for us to change. And maybe that's what's happening now. So maybe it kind of spawns innovation.
I guess I'm thinking right away that what you're saying is true, but it's also one of the biggest problems that we have. We need to have this type of intelligence. We need to have leaders that have the experience of having lived through stuff before and seeing what did work and didn't work, rather than just possibly, or possibly not, reading about it. And if we're doing this now when we're realizing that this type of push is driving our economy forward, then we should have been doing it when the economy was good, because we'd be making even greater leaps. I think the other issue involved in this, though, is that the amount of regulation, the amount of control that gets in the way. Do you find in the FinTech space that people are spending half of their money doing the auditing side and the other half of their time and money doing the actual products? Or are they restricted because of the restriction?
The fact that it's a regulated industry is definitely a constraint compared to other industries, say creative industries, where it's not, because you have to get authorization, depending on what you want to do, and that's expensive. So that prevents the very, very low end. It means that the minimum hurdle to get something off the ground, which is authorized by the FSA or the FCA as they are now, is expensive and difficult. If you look at what some of the say challenger banks like Metro spent, it's a fortune, tens of millions of pounds, and so on and so forth. So yes, that's definitely a barrier. for sure, and there's nothing you can really do about that. Although the government are trying to ease the regulation. It's an interesting point that your initial reaction might be, well, regulation is the biggest barrier, but actually we asked our entrepreneurs what they thought the biggest barrier was, and it was vested interests, i.e. it's the existing incumbents trying to stop them, or their perception of existing incumbents trying to stop them innovating, because you've got all these entrenched positions and they're pretty powerful. So they didn't say regulation.
I get that perception, but is that correct?
There's definitely truth in it, because if you look at the fact that 85% of the business at the moment, retail, go through the big five, there's definitely a lot of power in the big five banks, for sure, yeah.
So in terms of trying to disrupt or innovate or do something different along the processes that the banks follow, what you need to do is find the points in their process that you can intersect. Something I've learned over the years is that when I'm trying to make a change, if I try to change your process, it's a lot more difficult than it is if I'm trying to change mine and tell you how you need to adjust to deal with mine. I think that we're in the bank case, they have the power and they don't have the need to make that change. Is that climate adjusting? When you say the bank barrier for licenses is going down, but there's still a barrier about the amounts of people who could open banks in the first place. So what about the other restrictions that get in the way?
I do think what you're seeing is a lot of big focus on the retail innovation rather than the business innovation or the wholesale.
So consumer banking.
Consumer banking. What entrepreneurs are doing is they realize it's very hard to take on a large bank or a large insurance company head to head. There's no point in trying to do that. So what they do is they take something and they bite off a small piece and they make that better. So a classic might be, FX payments or something, a payment system or mobile payments or something that they can take off that doesn't require too much dependence on the bank, because they don't want to have this fight with this huge monolith. So at the stage this scene is at the moment is people doing lots of small retail things that you might think are under the radar, peer-to-peer lending and so on and so forth. But I suspect in time those will grow, and then they'll become real competitors. And as they get bigger, then they'll be able to take on the banks maybe on a larger scale.
That does make sense. I think I'm sorry.
Yeah, the one I can think of, so mobile payments, for example. I won't mention the brands, but swipe card type systems on iPads and mobile phones. That's disruptive because it opens up a market to people who didn't want or couldn't get merchant licenses to take credit card payments. You pay a one-off fee. You can take one payment a year if you want. It doesn't matter. You just pay a flat fee when you take the payment. So what that gives you is a new market of people who just wanted a very light version of that, but couldn't get that merchant account from the bank because they don't have the trading history. Once that market expands up and produces enough revenues and makes those companies big enough, they'll just back into the conventional market. And I think that is the strategy of many entrepreneurs, because they can't take on these big boys. So what they do is they'll go where they're not at the moment, get established in there, get the scale they need, and then they'll try and back into them when they can. And I think you'll see that happening, but not quite yet.
What we see a lot in the technology startup sector are products that are being created and that are being purchased by companies to either bury or to incorporate in their space.
Yep.
To me, it seems in the financial space, one of the targets of these folks in your group, for example, that are trying to disrupt is to create the better mousetrap that the bank wants. So rather than create a product that competes with the existing institutions, is it a shorter and less painful path to get them to buy something that you have that they only know they need it once you have it?
Quite possibly. I think definitely. I don't know what the proportion would be, but I don't doubt that some entrepreneurs will be made an offer they can't refuse, and I do know that some financial institutions will have a policy of trying to buy these guys out and bury them while they can, for sure. But I think that over time, that the thing that will blow this thing to pieces is simply that technology ultimately drives transaction costs down and blows industries to pieces. And so, although yes, there is resistance, of course, from the existing incumbents, do you really think they'll be able to stop the tide of technology through the financial system, when it wasn't stopped in retail, it wasn't stopped in travel, it wasn't stopped in fashion?
The big differentiator is the regulation and the environment around legislation and controls
Sure.
and governance, which are 10 times more stringent than they were and probably will be even more so.
But isn't that just a break? Isn't that just inertia? Doesn't that just slow the inevitable down? I mean, I think it's fairly inevitable that you will have a completely different financial landscape, perhaps in 5 or 10 years' time. because technology drives that. And unless financial products and services are somehow magically different from, retail or fashion or whatever, they're not really. Consumers want to buy products and services. They want the best deal they can get, and technology delivers that. And so I think it's natural that you get resistance from the existing incumbents, but I just have enough faith to believe that ultimately I think the technology will win, because it'll drive the cost down. Ultimately, cost is, efficiency and cost and so on, and experience and having 24/7 access from any device you want. That's very, very compelling. And I don't see any reason why finance won't go the same way that, say, travel shops did. I just think it might take longer. Yes, it's regulated, the barrier's higher, fine, but I think it's heading in that direction. That's where it's going to go.
So it's just a little bit more thick and more slow, but it's definitely moving in that direction.
Totally.
What you were just covering off was a pretty good indication of why you're in the space that you're in, the understanding that you have and the knowledge that you can apply to these people that don't have it, which is why the entire East End, which is the wrong term for our technology sector and the wrong geography, because it covers far more than that, but there's been a fair bit of focus on the East End.
Right. Sure.
Communities, meetups, all kinds of different workshops, seed academies, funding camps, pitching events and the like. I know your space in FinTech overlaps into the overall Shoreditch Silicon Roundabout space.
Sure.
How do you find that to be cooperative? Do you find that to be competitive? Do you find this just to be a big crowd that you don't really see what's happening?
Do you mean the tech city space? I mean, I kind of think of New Finance as a sort of, I kind of refer to it as the financial quarter of tech city. So we tend to be a piece of it, but we're not the only, there are other areas there. So I tend to be involved in that particular vertical because that's my background. There are many other, sectors. There's clean tech and med tech and creative industries and a whole bunch of other people doing stuff. So tech city is that whole big thing. And we're just one part of that, one piece of that, like I say, the finance quarter. What's interesting about finance, though, I'm not sure how generic skills transfer, because the thing about finance, FinTech is, it is quite specific. So of course there is some cross-pollination and collaboration and so on, but generally the people who are involved, the entrepreneurs, have domain expertise. It is hard, although they may hire people who don't to build the products and services, it is hard to launch, I think, at the moment without domain expertise. But things like Bitcoin are not born of people with domain expertise, and they're quite successful. I think we'll get some very innovative solutions which just are out of the box, come from left field or somewhere. But not too many yet, maybe later on, I think. And also as long as the infrastructure goes into place. So we're also at a stage where things like authentication services and security and so on are being layered on top of the very insecure internet to make it robust enough to do finance. And when those services are utilities and very readily available, and you've got APIs into banks and all the rest of it, then that produces everything you need for somebody just to come up with an idea and just produce something. And we're not quite there yet. So the hurdle is really too high at the moment for that level of disruptive innovation, I think.
Well, Bitcoin's an interesting one because it's a consumer angle on banking and it's a consumer angle on exchanging currency online. So it's quite an interesting side. The layers of security that you're talking about, I personally believe the biggest problem that we have with security is that it's still far too much of an add-on as opposed to being built into the requirements. And in the financial services space, in general, that's a little bit different because of the regulation, because of the controls, because of the auditing requirements that you have. But again, I'm wondering if that nature of that business, which makes it far more business-orientated, actually applies itself well to the startup scene, because you need that type of experience, and you tend to find more people, older and experienced people, to be a little bit more risk averse. So are you finding it's a higher barrier into your sector because of that, or are the barriers just pulling down because of cloud and all of the excitement of building your own economy?
Oh, no, I think the barriers are coming down. I think the barriers are generally coming down. As people put those utilities into place, that barrier is gone. You simply subscribe to a service that's robust enough to give you security, authentication, or whatever it might be. But I know of companies who are still deploying it. It's still relatively new. We're used to an internet, used to sort of Facebook, where you can be anyone, call yourself what you want. Nobody cares, it's unauthenticated, but then nobody's going to lose a fortune. Once you start doing finance, if you want to interact socially on Facebook, fine, what's the real risk? You don't require a high level of security. Okay, there are risks, but you're not making investment decisions, you're not investing your life savings or choosing a pension. If you want to invest, if you want to interact financially, there needs to be a more robust system. And that isn't quite yet in place.
But there's a lot of crossover that people are like, we have more information and communications and knowledge about security, which would make us more secure or more aware. But on the same hand, we have the adjusted behaviors from social media and the way that we share information that makes it easier.
Right.
It's not unusual to hear somebody talking their or speaking their credit card number over an iPhone on the train on the way into town. Right. So our attitudes are being informed and fixed on one hand, but they're being broken and torn down on the other hand. So we still have a big lesson. I think the obligation, particularly in the side of somebody who's providing a financial product, you have to protect the consumer.
Yeah, I think that's true. I think but that mashup and blend is still developing. I'm not sure what the solution to that is yet. At the moment, the sites that are authenticating users are using conventional means. So if you want to sign up to an investment site or whatever it might be, you have to go through a process that's very, very similar to sign up for a bank account. But that might change. I think that there's more innovation to come in that space around identifying who you are and so on and so forth. And that's just not there yet, but I think it's coming.
I think that have a huge amount of interest in startups in the security space that we're going to be seeing over the next little while. Just before we wrap up, I wanted to take a minute to have a quick chat about Kiva, an organization I think that you've got some great interest in. And since it's very financially oriented and it's a microfinance site for entrepreneurs, I wouldn't mind if you gave us a quick run through.
I just particularly like Kiva as a form of charitable lending or giving or whatever, because it's innovative, it's financial innovation. But microlending, I think, is just a better way to fund entrepreneurship. I think if you want to fund entrepreneurs in a third world country, then lending them small amounts of money, it's relatively it's not risk-free, but the amounts of money are quite small. I think that is a revolution that could really change things in terms of charitable giving.
In the similar vein, what it is allowing the public to fund entrepreneurs in a different idea and in a less charitable type of a manner.
What's happened is as you move from the real world into cyberspace, you end up with many more combinations of things in cyberspace because computers can do many more combinations and you can try stuff out. So Kickstarter it's all about decentralization. If you take Kickstarter, Steeves, Zopa, it's all about decentralization. So the source of capital is now decentralized, i.e. the crowd. So on Kickstarter, people they gift, don't they? Or they pre-purchase something, and that is a nice innovation because we didn't really have that before. Or alternatively, on something like Zopa, they're lending money, so they get together to produce capital to lend to someone. Or on Steeves, they invest, and so on and so forth. So that is definitely a revolution that makes sense because there's a social aspect to the finance that's been missing in the old world where a small number of companies control everything. So I'm very into the whole. I like microfinance, and I like the fact that people get together to do something that meets their values and that they particularly like. And in my case, it's really just supporting entrepreneurs. But there are other sites that support students and student fees and so on, or products or new businesses or creating new films or whatever. That is a nice aspect of new finance I like, because those projects would never have got funded in the conventional terms. They're unfundable in conventional, the old finance world. So there's a lot of good being done there, which I quite like. So that's really why I support Kiva.
Appreciate that. It's interesting that contrary to popular opinion, there are lots of people who want to invest and lots of people who are looking for the investment. It's just simply a matter of connecting and communicating.
Yeah.
Thanks very much for your time today, Eddie, and a little bit of a focus on the new finance and the tech scene in London. Anybody that's interested in finding out a little bit more about new finance, take a look on the web at newfinance.org and join Eddie for one of his events. Thanks again, Eddie.
Thank you.